It posted numbers post-markets on Friday. It was a mixed set of earnings for Q2. Revenue growth came in line with street estimates, while U.S. business also met the expectations. Margins saw an expansion, while profit was also aided by PLI as well as other income. Erez Israeli, who is the Chief Executive Officer of Dr. Reddy's, joins in now to discuss the numbers. Mr. Israeli, thank you very much for joining in. Well, I'll start with the U.S. business. You know, the U.S. sales did better than anticipated at around $382 million this quarter. How much did Revlimid generic contribute, which is the cancer drug, and how did the base business perform in the U.S.? What were factors such as price pressure in the U.S. this quarter for you?
Yes, so most of the growth came from the base business and the other products primarily driven by volume growth and market share. And in terms of pricing, it's continued to be moderate, more moderate than we used to in the last couple of years, very much in line of what we had in the last couple of quarters.
So what could we expect on a quarterly sales for the US in the second half? Will we see it in a similar range of, say, $380 to $390 million? Are you looking at lower, higher? Any expectations that you can give us?
Likely that we will continue the same trends of growth that you saw till.
All right. Dr. Reddy, along with several other pharmaceutical companies, have been named as defendants in a complaint filed in the U.S. court with regards to the Revlimid generic. Can you comment on what exactly has happened here?
Yes, we have, and we are denying any allegations. We believe that there will be any outcome of it.
Okay. Well, before we discuss margins, Mr. Israeli, a quick word on the India business. It was up only 3% on a year-on-year basis. What led to such a sluggish performance this quarter? And what is the growth run rate anticipated for the next 2 quarters?
So the growth is getting impacted, although as the base we had both NLEM as well as products that we divested. Without this, we are about mid-single digit. And we are ramping up, investing in our big brands, and likely that you'll see an acceleration of that growth. In addition to that, we signed quite a few deals. We launched Nerivio, and we signed very interesting deals. And the main growth for us in India will be actually bringing innovation, especially innovation that represents standard of care. And that's what will drive the growth in India in the future.
Okay, well, the margins have been aided by higher other income, the PLI-related income. What were the base business margins this quarter, if you can tell us?
We will continue to show very, very healthy margins. So EBITDA is 32%, and which is way above. Normally, we are giving guidance of 25%, and right now we are walking above that guidance.
All right, and what according to you then would be the exit run rate on margins?
So we will continue to see that kind of margins also in the future. As you can see, both the EBITDA as well as return on capital employed are more than 30%. Normally, we believe that the right place to be for us is around the 25% EBITDA that allow us to both increase our investment into the future as well as to give a very healthy returns. We are now, of course, in a situation which is more than that, and in coming years it will maybe less than the 30% that we have now. But overall, we are planning to meet and to be above the 25 for years to come.
Okay, all right. So you would like to be within that 25% margin range, which you have been guiding for a couple of quarters now. But on PLI, Mr. Israeli, would that now become a reoccurring income, something that we need to factor in for the next couple of quarters, simply because it has seen an increase in the past couple of quarters as well, the PLI income in particular?
We met the criteria for the PLI already from the first quarter, and we are using it for a couple of quarters by now, and as long as we'll meet the criteria, we will apply for it.
Okay, you'll apply for the PLI. What is the guidance on growth in both emerging markets and markets such as Russia? Any impact of the prolonged conflict weighing on the numbers now?
The impact is positive, as some European players are not investing in that market as they used to do in the past prior to the conflict. The overall emerging market is having a very healthy growth, and likely that it will stay there also this year. In the case of some markets like Russia, there are seasonality of products or timing of tenders that create always fluctuation from quarter to quarter. But other than that, I see a very nice growth in emerging markets.
All right, and could you give us a sense on your inorganic growth plans in India and other emerging markets, since you're so optimistic?
We would love to have inorganic growth in India. We are always looking for opportunities, and hopefully they will come. India is our main priority for that. At the same time, we're looking for inorganic activities also in the other spaces, and hopefully it will come. We are doing inorganic in India, not just in terms of acquisitions, but also collaborations, licensing in, and actually most of the growth will come from collaborations with innovators outside of India in order to bring their standard of care to India.
Okay, all right. Mr. Israeli, before we wrap this up, just a quick question with regards to the base business. Leave us with the base business guidance in the US markets, X of Revlimid generic.
We have a very healthy portfolio of new products that will be launched, products that we believe will have less competitions, and which we are going to launch between FY25 to FY27, that should compensate and more for the potential competition on lenalidomide. And in addition to that, we see a very, very nice growth on the base business as well. So the US will continue to stay a very important place for us, and also a growth place for us, also post-Revlimid.
Okay, all right, Mr. Israeli, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that is Dr. Reddy's. While the numbers were okay, one of the pieces of news which is weighing down on the stock is that their Bachupalli facility, which is their Hyderabad plant, has received 10 observations from the US FDA. So while the numbers might have been okay, I think the street is a little cautious about those 10 observations and what they might contain. We'll take a short break on that note. On the other side, we will be talking to